$1 million.
What if I told you this wasn't enough coverage to protect your family? What if I told you this was too much? Too much? What about this guy? If you search, how much coverage do I need life insurance? You'll probably run into a bunch of blog articles telling you to
10x your income.
in which case you start to realize, well, maybe that's not adequate enough. I need something a little more specific. So you go to a life insurance advisor who has an incentive to sell you a
Bigger policy.
which brings you right back to square one wondering, will someone just tell me how to do this equation? You know, there's a better way to calculate this. Do tell. A very simplistic way to break this down is by calculating your financial obligations and then subtracting your liquid assets. Step 1. Calculate your financial obligations. You might have heard of the DIME formula. No? Absolutely not. No. DIME stands for debt, income, mortgage, and education. 4 areas that you should account for when calculating your life insurance needs. Debt. Begin by adding up all your debt and final expenses. For example, debt could include any outstanding credit card bills, an auto loan, or a trip to the Caribbean. Why are you using my credit card? No. Income. Decide how many years your family would need financial support and multiply your annual income by that number. Mortgage. Calculate the remaining amount you need to pay off your mortgage. Education. Estimate the cost of sending your kids to school or college. By adding all these obligations together, you will get a well-rounded view of your needs. However, it doesn't account for any life insurance coverage or savings you may already have. It also doesn't consider any unpaid contributions a stay-at-home parent makes, which brings us to step 2. Step 2, subtract your liquid assets. Assets can be things like savings, an educational or retirement fund, any current life insurance you might have. For example, you might be covered through work. So, let's walk through an example together. To illustrate, let's look at a fictional couple, Will and Lindsay. They have 2 children, ages 2 and 5. Lindsay makes $75,000 a year, and Will is a full-time stay-at-home dad. The couple decides they want a 30-year term life insurance policy. By the end of the term, their children will be adults, their mortgage will be paid off, and if they stick to a savings plan, the remaining spouse will have a retirement nest egg. To calculate Lindsay's life insurance needs, she would first add her obligations. $19,000 for debt, which is $16,000 in car loans plus $3,000 in credit card debt. $1.2 million for income replacement, which is $75,000 times 16, the number of years before her youngest child graduates from high school. $150,000 for the mortgage balance, $200,000 for 2 children's college educations, and $7,600 for final expenses, approximately the median cost of a funeral with a casket, according to the National Funeral Directors Association. This totals $1,576,600. From this, Lindsay would then subtract her liquid assets, $20,000 in savings, $10,000 in the kids' college funds, and $150,000 of group life insurance. This means that Lindsay should buy a $1.4 million term life policy. Now, here's how the calculation would work for Will. Here are 2 important tips to leave you. 1. Walk through the numbers with your spouse. How much money does your spouse think the family would need to carry on without you? Do your estimates make sense to them? 2. Consider buying multiple smaller policies instead of one large policy. This can help reduce total costs while ensuring adequate coverage as your needs ebb and flow through the years. For instance, you might want to get a 30-year term life insurance policy to cover your spouse until your retirement, and a 20-year term life insurance policy to cover the children until they graduate from college. This can be done. And if you're overwhelmed by the math, just want a simple solution, simpler than 2 steps, PolicyMe has created a life insurance recommendation engine. All you do is answer a few questions and bada boom, bada bang, there's your coverage. Head to the link that's just popped up on the screen, or it's also in the description below. And that about covers it. This was my moment. I had one moment to close this video.